Well, joining me now for a closer look at the day's market moves is Muhammed Wagley from Sasfin Wealth. Thank you so much for your time, Muhammed. Lots of pressure that we're seeing in the equities market. Actually, not even just the equities market, also in the currency. Local market down today, more than 1.5%. The rand also pulling back. Is the risk in the air just too much for investors to ignore?
Hi, Zinati. Yeah, just to actually add on to what you said, we've seen a bit of pressure in the bond space as well, so it's been pretty much across the board, these nerves are sort of permeating throughout the market. You mentioned the Rand weekend, which, given the context of the year, is actually a bit of a surprise, to see some sort of flows into the US dollar. Gold obviously continuing its run. So broadly speaking, we are seeing a bit of a flight to safe haven. And in my mind, it's really on the back of I would say the ramp up in tariff tension between China and the US. At this point, we're sort of well familiar with how this goes. There's quite a bit of precedent. There's going to be a bit of back and forth. And then I imagine subsequent to that, there'll be some concessions and we'll see things settle down. But I think until that happens, we're going to see a little bit of pressure, a little bit of a flight to safe haven. And then the last thing that I'll consider is, when you look at the context of the shutdown issue in the US that still hasn't been resolved, the question is, how is that going to impact Mr. Powell and the Fed? We've not been seeing the data that generally gets released by the Bureau of Labor Statistics, which is obviously a federal entity, and they've been under sort of shutdown. The Fed uses that information to make those decisions. So yeah, bottom line is that there's quite a bit of uncertainty right now, and it'll take a bit of time to figure out, but I think take some solace in that we've actually seen not too dissimilar throughout the course of the year.
Yeah, uncertainties, of course, you mentioned specifically around tariff tensions, but also the US government shutdown. But there's another element now that's been added. Worries over the regional banking sector in the US have resurfaced. And actually, just thinking back, we did have that US regional bank sell-off about 2-3 years ago, if I remember correctly. So this feels like deja vu. What's bothering the markets at this point? And could there be a potential contagion effect?
So I think you summed it up brilliantly there when you mentioned deja vu, right? Silicon Valley Bank was the name of the one that you mentioned, and that happened about 2 years ago. They sort of went under, and then subsequent to that, we saw a massive rout on the banking shares. And so sort of what kicks this off is, I think earlier in the week, there was news about I think it was called Auto First Brands. It was an auto parts maker, and along with them there was a subprime lender, Tricolor, that went down. And then subsequent to that, earlier, I think it was yesterday, we got, I'd say, two pieces of somewhat worrying information about a couple of banks there that were basically, in a nutshell, under a bit of trouble. And subsequent to that, we saw the regional banking index fall about 6%. And I think given the context of deja vu, there's quite a bit of worry, but it's not to say that that's the only thing. If you look back at sort of some of the comments JP Morgan CEO Jamie Dimon made earlier in the week, he was talking about, he said something along the lines of, you see one cockroach, there are probably more, so that had also stoked a few fears. And really what we're seeing is a lot more attention on this private credit space, which is, really done quite well, but is a little less regulated than, your bigger banks and things like that. So there are quite a few eyes there, but I think, the main story there is, massive fears about, is this a Silicon Valley Bank type thing that we're going through, and could that have knock-on effects? Because if you actually look at the banking results, which came out earlier this week, they were phenomenal, but that's not everything, right? Perception matters a lot more. And, if that is the case, if we see sort of more negative headlines in this respect, I think the whole space is liable, to see a bit of pressure.
And you're actually right. This is such a big contrast looking at the regional banks versus the big major banks that reported earnings earlier on this week. Let's get into tech and e-commerce. Prosus updating us on the process of acquiring Just Eat Takeaway. There's a certain stake that Prosus has now in Jet, and it says that it will proceed with a squeeze out. The transaction is practically complete at this point, right?
Yeah, pretty much done. Truth be told, that was my takeaway. I don't know if it was last week or 2 weeks ago when they had announced that, 90% of it had been done. Ultimately, they're going to get pretty much the balance of the shares. That's going to happen. You know, they've got to cut their stake in Delivery Hero. I think the bottom line is that there wasn't really too much news here. I think there's just that jump from 90 to 98%. But ultimately, the overall strategic goal remains unchanged. You know, they wanted to have quite a bit of space in this food delivery space, and now they're going to be one of the biggest players there. I think this will make them the fourth or I think it's the fourth largest food delivery player in the world. And, you know, in many ways, this is like a full circle moment for the company. I think back in 2020, Naspers tried to buy Just Eat, sorry, and they failed with that. They had ended up being acquired or merged with Takeaway.com, and now the company has come back and bought that merged company, Just Eat and Takeaway.com, for a lower price. You know, so it does really represent a good deal for them, and, you know, a massive step forward in you know, achieving one of their big strategic goals.
Yeah, very, very interesting nugget that you add there, Muhammad. Before we get into the stock picks from your peers today, not a lot of company news out on the JSE, but we did get a trading update from Zeder, that agribusiness investment holding company, saying that it expects its main performance metric, that's the NAV per share, to actually drop. And this is on a yearly basis, and I think on a quarter-on-quarter basis as well. Not much color there, but any crayons that you can give us?
Yeah, look, it was very big. You know, we'll get the detail, I think, a little bit later next week, perhaps on Tuesday. So they've attributed the drop to a special divvy that they made earlier in the year. I think it was 31 cents per share. There seems to be a bit of pressure on some of their unlisted investments, but really, yeah, barely crayon, very much a black and white analysis here. There wasn't too much. We'll see a bit more on Tuesday, but really not much to speak to.
All right. Well, before we get to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
So Premier, since listing, has delivered pretty much on everything they've said. They've got this huge bakery that's coming through, low cost, reasonable margins. Wherever they are now number one, and they're entering into the biggest market in the country. They're going to take on Tigers, and it's going to be an epic battle, but they seem to be doing well. They've been growing earnings 20% each year by reducing their costs, reducing their debts, and just basically running a very tight ship. Now, when you look at that profile and when you speak to them, it was clear that could continue for another 2 or 3 years. But now if you add Rhodes in, Rhodes has a fantastic prepared meals business that's quite significant in Woolworths Life. And all those meals that you see in Woolworths come from Rhodes. So that's a business that's cleaned out its debt. Its margins are at 10%. The management has kept a very tight ship there and grown really well. So that is what Premier would have wanted to do in 2 or 3 years' time when the bread growth had probably gone away.
The share price has given that back, so I think it's at buyable levels. And it's, with a very decent dividend yield, considering the consistency of their earnings, I'm looking at a price target, but both on a technical basis and fundamentally, of around about 115 Rand. So, you know, that's 15-18% potential gain. But more than that, the Premier Food announcement today, they won't be buying Rhodes Food Group if they don't think that that sector in itself is providing value at current prices. So it's not merely an AVI story, I think it's a sector story as well.
Muhammad, very, very interesting point that Rikas makes there, that Premier wouldn't be buying Rhodes Food Group if they didn't think that the sector has value, and that's obviously cheap with lots of growth potential. Just talk to me about these, and I guess we can maybe just encompass everything. We've got Premier that is absorbing RFG, but a lot of people have always favored AVI as well, and they have been takeover rumors around that stock as well. What's your take on the moves that we're seeing there?
Well, quite interesting. Both of them foodish companies, I suppose. And yeah, the sector is looking quite good. Obviously, we got the news from Premier just in relation to Rhodes Foods Group earlier in the week. But I think just to echo some of the points your analysts made there, by all accounts, they've got an excellent management team. The financials look good, and they've been seeing massively consistent earnings growth, even when the sector wasn't looking as sort of attractive as it is now. Then you add sort of Rhodes into the picture. It's not as if they operate in the same place. There was mention of those prepared foods, and I think there's a lot to like here. We're going to see synergies, and this is very much a lean sort of fighting machine that is well placed for the future, very much like Premier Foods. And honestly, my thoughts are very similar in relation to AVI. I didn't hear it too clearly, but I'm sure they would have made mention of a phenomenal dividend. They are looking relatively cheap from a price perspective as well. I heard mention of a target of around $115. I think that's completely fair. So there's a lot of upside. They've got a great little dividend. The sector looks like it's relatively well valued currently. So there's a lot to like in both tickers. Truth be told, I'd want to get a bit of both.
All right. Well, what are you getting today? What else are you getting? Your stock pick.
Yeah, so a bit of a change of tact in that respect. So I'm going back to luxury. I've been a long-suffering holder in that respect. I'll go with Ferrari this week. So the company actually lost probably close to double digits, was near 15% just last week on the back of their capital markets day. Essentially what had happened is they went a little bit cold on EV. They had said that it's going to be about 40% of their revenue mix by the end of the decade, and then they've now changed that to about 20%. So it was really on the back of that we saw a bit of a blip, but that wasn't necessarily a comment on their demand. And then almost not really having anything to do with Ferrari, we got some really good numbers, much better than expected from Louis Vuitton, so we're actually seeing a little bit of momentum in that space. And I think when we see a bit of appetite rotate back to that high-end discretionary market, Ferrari is going to be a big beneficiary, so we'd want to have some before that happens. So yeah, Ferrari looking a little bit better.
All right, well, thank you so much for your time and for your analysis on what is currently moving investors' money, Muhammad. Do have a great weekend. That was Muhammed Wagley from Sasfin Wealth.